The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 28 June 2024. Well, this is publishing weekend. We'll have the July issue of the Morgan Report published over the weekend. So first things up, I'll talk about gold for a moment. This is from the print. Gold gleams on rate cut hopes after inflation data en route to quarterly gain. Obviously, everyone in the gold sector, precious metals, anticipates whenever this whenever the rate cut takes place, it will be a boost to gold, but gold's doing quite well without a rate cut. And that may be anticipated in the price already. Time will tell. Will it have a long-term effect? Somewhat. As I've said many times, the real rate of inflation, the true rate of inflation, and real interest rates are the most important. So for the real rate of inflation to be, let's say, 8%, and the Fed funds rate, the interest rate's at 5.5%, you still have a negative 3%. In other words, inflation is greater than what you're getting on a bond yield or T-bill yield. Because of that fact, it really cannot affect the gold market as much as is purported by mostly the mainstream press. So you want to bear that in mind. And this next article from Bullion Vault pretty much surmises that in the headline, gold below 2,300 as global shipping inflation raises interest rate forecast. So if you were to see an increase in interest rates, would it affect gold to the downside? Probably. Although, again, to be really substantive, it would have to be above the true inflation rate, which at this time, as I said, is not. It's from the World Gold Council. This one's interesting. Gold ownership on the rise among North American professional investors. You can read the article. Chart 1 shows gold ownership among North American professional investors has risen since 2018. And then, of course, we got to look at, what do they mean by professional investors? Large institutions, consultants, and financial advisors, the result, which confirmed a growing trend of gold ownership among this audience. I question that somewhat. I'm not saying the data isn't accurate. I think it probably is. But if you really got into the certified financial planning industry, or financial advisors, as is referred to in this article, that's a big, big market. And if those financial advisors did what was the appropriate thing basis the data, which means something like a 10 to 15, even higher exposure to gold, would have a far wider impact than what they're showing in this chart. But I think what's important is not so much that part yet. What's important is the trend. And the trend, it looks like, has changed, and that trend will continue until it actually stops, which could be years out. So it's a good thing to see this happening on the institutional basis. Will it continue? I believe it will. The trend's been established. It'll be interesting to see as stock markets perhaps unravel, precious metals kind of hold their own, and as the interest rate game continues to play out, where gold goes, and chances are most likely it will continue to go higher over time. Moving over to silver, I often quote PV Magazine, Photovoltaic Magazine. Module prices surprisingly keep going down. If you read the article, what this woman is saying, who speaks for Wood Mackenzie, about the overcapacity of panel prices and expected photovoltaic demand over the next several years, she's saying that the 0.8 cents per watt threshold now may be difficult to exceed. She expects many manufacturers have backpedaled on previously announced capacity expansion plans and renegotiate module supply contracts. In other words, the push into solar, which has been great and will continue and is accelerating, may have gotten ahead of itself with the ability to keep up with that demand. That's why they would renegotiate or stall out on some of these contracts that they've made. Silver's silver bullet. Gold and copper have fallen while silver has taken the top spot among spot metals. And this one's an interesting one. I certainly like reporting this because silver has had such a tough slug over the last many years, and now it's finally getting back into the 30s, although we've been at the 29-ish level for a while, I know. Turns out that silver might be winning the gold when it comes to investment returns. While gold and copper have captured headlines this year, the under-the-radar little sibling silver is trading around the highest level since 2012 and is up about 21% year to date. Silver, like copper, has practical utility beyond its financial asset. If the trend is expected to continue, with total silver demand forecasted to grow by 2% in 2024, the supply is forecasted to fall by 1%, creating a potential multi-year low deficit, according to recent notes written by Adam Fenquist, Chief Technical Strategist for LPL Financial. Silver is popular among traders at the moment simply because it's cheaper than gold. But there's also a practical element to the element's recent rise. Silver could conduct heat and electricity better than any other metal on the planet, which means its industrial applications are nearly limitless. For instance, China is one of the largest sources of silver demand, and imports to China have surged due to silver's role in making solar panels. China is wrapping up solar panels production, which means the country is set to buy even more metal in the weeks ahead. So, again, a positive article on silver, and especially that it's outperforming some of its peers, is music to silver investors' ears. But again, I think we're probably hit what we are going to see in this market, gold and silver, for a little while. You might see a quick surge into July with metals prices, get people excited again, and then only to see the professionals short even more. And by the way, the Commitment of Traders report does not look all that beneficial longer term, meaning that my prediction of probably a sideways market trading range for the metals is probably the most accurate look at the market currently. And I'll just close out with my friend Matt Watson, who interviewed Peter Thomas, and I did so some time ago. Peter was actually a floor trader during the Hunt situation, and we had a lot of fun batting the ball back and forth on those early days and where he was as a young man, how he got involved in the futures markets, how he happened to kind of stumble into the Hunt situation, and quite a listen. So this is something you might want to pick up on the Kitco website. Matt Watson does great coverage of all metals, and he is certainly worth your time to listen to. And Peter Thomas is quite the character. I think you'll enjoy listening to him as well. So I'll go ahead and sign out. This is David Morgan with this week's Weekly Perspective from themorganreport.com. And again, as a reminder, the premium service letter, the paid service, comes out this weekend. And if you're inclined to come on board, we are offering a free consultation for anyone that subscribes, and you have 60 days to determine if you really want to keep the service or not. So in other words, you have no risk with the consultation, which of course is yours to keep regardless. So sign off there. I'll be back with you next week. Hello, it's David Morgan again. The financial landscape has drastically shifted since the pandemic. The old rules, they no longer apply. Inflation is spiraling, and traditional investment paths aren't making you wealthy. You're watching your wealth diminish. But here's the good news. You don't have to be a passive spectator to your own financial decline. We're thrilled to announce an exclusive limited time offer at the Morgan Report. For those who join us now as premium or mastermind members, you'll receive a complimentary 30-minute consultation with me. With decades of experience, I can help you navigate even the toughest economic climates. This is your chance to get personalized advice tailored just for you. But act fast, this offer won't last long. Whether you're looking to refine your current financial strategy or start fresh, this consultation could be the turning point. Imagine having direct access to insights that could safeguard and grow your investments during these volatile times. Signing up is easy. Just head over to themorganreport.com. As a member, not only will you get this exclusive consultation, but you'll also gain immediate access to the Morgan Report Opportunities, a resource where we share our top investment recommendations and strategies. Don't just take our word for it. New members can try us out for 30 days. If you find the consultation and advisory newsletter isn't for you, we'll refund your money. Remember, this offer is only available for a limited time. Don't miss your chance to get ahead in this uncertain economic climate. Join as a premium or mastermind member today and start your journey toward a more secure financial future. Thanks for watching. If you have any questions about the offer or your investment strategy, leave us a message. Until next time, stay smart, stay safe, and keep building your wealth.